Alright, so in this video I wanted to talk about an earnings trade that I made on Fedex where I made $230 almost. So as you can see here, June 23rd I opened a trade for June 24th expiry on Fedex. I sold the 210 put, collected $2.30, and then the next morning at 9:30 and 59 seconds, so not even a minute into the market, I closed it for 2 cents. So that gives me a profit of about $228 minus commissions, of course. Commissions with Questrade for this trade would be about $12 combined. Now FedEx had earnings. If we look at the chart here, it had earnings June 23rd after hours. So if I go on the 5-day chart, you could see right over here, June 23rd. This is when I entered the trade. I did an out of the money put at expected move, naked put. Collected whatever was available, and the plan was if it breaches, if it falls below two, I think my strike was 210. If it falls below 210, I'm not rolling, I'm not saving the trade, I'm just taking the loss. So that's a new strategy that I'm trying out. So if it was going to fall to 200, I would close the put for $10. I sold it for $2.30. That means I'd lose the difference of $7.70. But there's a good chance that it stays above 210. It is definitely possible that it falls to 200 or 190. I mean, we've seen it with Netflix, but that's what I was counting on, is that there's a better chance, there's a higher chance that it stays above expected move, especially to the downside. So yeah, as you can see, it was trading at around 230 before earnings, or 228, as you can see here. Now the straddle value, so the value of the call option and the value of the put option at the money before earnings was around, I believe around 28 points, or no, sorry, it was around 15 points. So I went with a strike that's 15 points lower than the current market price. I went with 228 minus 15, and then I went a little bit lower just to be extra safe. So I picked a 210 strike. It was worth $2.30 at the 5 minutes before the close, and then as you can see, after earnings it went up, and I was able to close the trade for 2 cents. And that's why I love earnings. That's why I can't ignore it. Although it's very risky and it's very random and anything can happen and your losses can wipe out all your gains, but it's just very hard to ignore such an easy winner. I mean, not even 5 minutes in the market and just $230 like that. It could have been even more if I picked a strike that's even closer. I based my assumption on, I always talk about this website, earningstats.com. So it's a website that shows you the stats of previous earnings. Now, obviously, it doesn't mean that because this is what happened in the past that it's going to happen again now, but it gives you definitely gives you a good indication. So if I look at FedEx, and if I go to not dashboard, but if I go to actual versus expected, I could see that just based on this chart here, the gray area, the gray shaded area is the expected move before earnings, and then the colored bars are the actual moves. So just looking at it quickly, you can see that most of the time it stays within the grayed area. So most of the time it stays within the expected move. You could see, I cannot say that it goes up more times. It looks like it goes down, and it has gone down more times than it has gone up, FedEx in general. But what I'm looking at is how many times has it gone below expected move. So you can see it happen here once, twice, 3 times, 4, 5, 6, 7, 8. So 8 times out of, I think there's like 70 times, I believe. So just based on the fact that it doesn't fall outside of the expected move that often. So an out of the money naked put in this scenario, in this chart here, would have won so many times. It would have been very profitable. There is one occasion here in 2019 where you probably would have lost a lot, but probably would have wiped out maybe 4 earning plays. But if you play it in the long run, it looks like it's a profitable strategy in my opinion here. So it's based on that assumption that I sell the out of the money naked put, but I don't plan on rolling anymore and trying to save the trade, because then it could keep going lower. It takes up more buying power trying to roll the trade, and then you can be placing a margin call. You're forced to close the trade for a bigger loss than if you had closed it initially, and it stops you from making other trades because you have no more buying power. So I'm definitely not rolling anymore. I'm not staying in the market. I don't want to stay in the market. I don't want to be exposed in the market anymore. I'm looking for quick in and out trades and zero DTE trades. So I want to be in cash at the end of the day. That's what I'm looking for. That's why I like earning trades. Although earning trades you're holding overnight, but it's really random. It has nothing to do with the market. It doesn't follow what the general market does, and you're just in and out from. You're in the market for like 5 minutes and that's it. So that's my thought process for this trade here. So that, and the way I would do it with Questrade is basically just look up the stock, make sure I'm under option here when I look up the stock. I picked the strike that I want. So what I did is I looked for the straddle value. Now right now market is closed, so you don't see the value, but I look up the straddle value. It was around 15 points, for example, at the money strike. So if the stock's trading at 240, I go to the 240 strike, look at the value over here. He was 15 points. So then I would just do 240 minus 15. So 240 minus 15 gives me 225. So then I would sell the 225 put. And then I go back to calls and puts. And then I would go and select. So here I would select the 225 put, sell, pick a price, and then just sell. That's it. And next day I just close it. Next day I'll find it in my positions here. And I'll just click on it and then buy to close. So when I open the trade, I make sure it says sell to open, and then when I close the trade, I make sure it says buy to close. So that was the trade for Fedex. How much buying power it took? So Fedex with Questrade, it is a 30% margin requirement stock. So you can see here, long MR 30%. So it takes about, so the calculation or the formula would be 30% times the price of the stock. So it was trading at around 228 minus how out of the money my strike was. So my strike was 210. So my strike, that means, is 18 points out of the money. So minus 18 times the number of contracts times 100. So that Fedex naked put took 5,000 US buying power out of me. So around 6,500 Canadian buying power just to place the trade. But I didn't care because I was gonna get out the next day. I'm not holding this trade for a long time. So it's really just I'm using a lot of buying power, but it's just for a quick trade. And if you want to look at the return on capital, it was what, $228 US divided by 5,000. So it's about 4.5% of return using the capital if you want to look at the buying power used. But it was done, I mean, in 5 minutes overnight. All right, so just wanted to share with you my trade on Fedex. So if you have any questions, leave in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free commissions. Thanks for watching.